Hello, everybody. My name is João Mischiati. I am from Brazil and I trade options in the United States. Today, I'm going to show you how much you can make with these high volatility stocks. And I'm going to do a simple strategy. It's called Equity Butterfly. Equity Butterfly gives you more premium than just cover the cost. This is a very simple strategy, and I'm going to show you exactly how much you can make for these two stocks. It's going to be BYND, Beyond Meat. I know that's not a great stock, it's really bad, but sometimes you can bet on these stocks and have more high probability to make money. All right. And the second one is quantum computer. Okay, it's not great. It doesn't have a lot of profit, really small. Maybe it goes up a lot, but you have to it's like you have to bet. You gain with this high volatility of stocks, a lot of premium. So maybe and probably you make money because the premium is great. Okay, just very fast, I'm going to explain what is equity butterfly. And when I'm going to do the trade live in live, you will see how simple it is. Okay. Basically, you do this. At the butterfly, you buy 100 stocks, and then you sell two calls ATM or a little bit of OTM, depends of the volatility, and buy one call OTM. If it really goes up, you will not lose money. You gain money, but you receive more premiums. You just lose money if it really goes down. Yeah, more than the covered cost. Okay, now I'm going to show you this opportunity. And of course, if you want to subscribe and like this channel so you can make more money than the other people, I will show you some great strategies. One, I trade with $5,000 and I make $20,000. So it's a lot of money for my risk. And my really risk was never $5,000. Just if the stock goes to zero really fast. And I know that's very hard to happen that. So let's go to my broker and I will show you how much you can earn in this strategy. Of course, you have to know that this is a risk strategy because the stocks are not great. It's high volatility stocks, but is where I think you can make much more money. Okay, I'm back and I'm going to show you with this stock QBT. You make 18% of premium. It's a lot, almost 20% premiums. Okay. And what are you gonna do? You're gonna buy the stocks. So you buy 100 shares of QBT. Of course, it's expensive. You pay $1,200.58. But it's not how much you actually pay because you will receive premium. You're going to sell discount $13, but not just one. You're going to sell two. So you get more premium. You get $2.47 premium, 24% of premium, 20% at least. And here you buy one option of 70 cents of $15. So it's like this. Oh, but if really goes up, I'm going to lose money. No, you never lose money. That's fact. You won't lose money if it goes really up. The break even here is 10 cents, 94. And you receive all this money. So let's see how much money you receive. Receive 2 times 120 minus equal $40. Okay, for the prime for this for this premium that you're selling, and you buy 1,000. So minus 0 cent. So how much money you're actually receiving? This minus this. So you're receiving $1.80. $1.80 of premium. So you're paying really, really low to buy the stock. You're paying 12.53 minus $1.08. So if you really, really, you're really buying these stocks for $10 here and 93 cents now. Okay, how much profit you can make in just 1 month, a little bit more than 1 month, with this QPT stock. Okay, there's stock that's more goes. The target here is $13. You can make $206, and you spend $1,000 and 80 cents, $1,000 a little bit. So you get 20%. And the best thing is that you're buying lower than 20 $12.50. You're buying for less than $11. That's why the equity butterfly is more comfortable, because you're paying less for the stock, much less. And if really, really goes up like above $15, it can happen really fast. It's okay, but at least you won't lose money. You never lose money. You're not paying. You're not paying anything. Okay, so you will make a little bit through $6.15. Okay, you're making just $6.50 if goes up $15. But the best thing is it's hard to lose. Oh, if the stock goes to $10, you can make this again, and make your make your break even lower. Okay, you will go to make even your break even to $9. You can do again the equity butterfly. So I believe that's a safe strategy. Of course, this is a high volatility, but you can make 20% with equity butterfly in these high volatility stocks. I'm going to show you one more that's crazy, okay? And then you'll see how much money you can receive in premiums. Okay, next one I'm going to show you the stock called Open, not BYND. Didn't work. So let's see how much you will buy if you do this equity butterfly. So let's go here. Okay, I'm going to buy the stocks, 100 stocks. Here I'm buying 100 stocks. And I'm going to sell 2 times call of $7. And I receive this prime here $1.10. And I will buy one stock higher. Just I'm going to pay here 72 cents. So here, and that's it. This is going to give me a great premium. Let me see how much it's going to be. 1 times 2. Going to be like $1.48 and $1.45, more or less. So you get this price, $1.45. It's almost 20% of premium. So you're really, really safe. Unless if it really goes down open, that can happen. That can go 50%, 60%, 70%. But imagine if you do this 2 or 3 times, the risk is gone. Okay, it's gonna be zero. And there are other strategies, of course, but that's how you can make a little bit more premiums. Of course, the equity butterfly, if you don't want to use high volatility stocks, or if you want to spend less risk, you can do with long options or 6 months options in front, so to be safer. Okay, so that's Okay, but can I lose? No, you can't lose. Okay, this if can't lose luck. If it goes up, you can't lose with your call because you're here and you're here, and you got a lot of premiums. So of course, if it goes above $8, you won't make a lot of money, but you still make some money. That's the probability here is 74%, and you can make if you stay in between $7 to $8, you can make $106, and you spend just this $591. So it's really good because the break even is $5.94. Okay, if it goes to $4, you still can do something to go to your break even lower and even lower with some strategies. So I guess unless if you really go $1, $2 really fast, you will probably make money on this structure. Okay. Hope you like. If you don't, tell me about what kind of strategy do you want. But this is an example of high volatility stocks with normal strategy that's called equity butterfly. I know that's not they don't say a lot here in the United States, but you get at least more premiums. Okay, it's not a great structures, but you can make more premium and be a little bit safer than just buy the stock and hope that it goes up. I prefer don't lose money, and then I'm going to do some strategies that I can with the premium that I really can make money. Okay, so thank you for watching and have a good day.